changes in 2026 that will affect your pay and tax. Working family payment income thresholds. From January 2026, Ireland's working family payment, the WFP, income thresholds increase by €60 per week for all family sizes, with specific limits like €765 for one child, €866 for two, €967 for three, and up to €1,532 for 8 or more children, making families earning less than these amounts eligible for more support and automatic qualification for food allowance from March 2026. Carers allowance weekly income disregard. For carers allowance in Ireland, budget 2026 increases the weekly income disregard to €1,000 for single carers and €2,000 for couples, effective from July 2026, up from €625 and €1,250 respectively, meaning carers can earn more before their payments is affected, with other supports like a €10 weekly increase to the main allowance also coming in January 2026. Successor Basic Income Scheme for the Arts. Ireland's Basic Income for the Arts, the BIA pilot, a €325 week payment to 2,000 artists, is transitioning into a permanent successor scheme starting in 2026. Following a successful 3-year trial showing positive impacts on artists' well-being and practice, Minister Jack Chambers confirmed the commitment in Budget 2026, building on the pilot's success to provide long-term cultural sustainability, though the exact scale and specifics of the new scheme are still being finalised, with calls for expansion beyond the initial participants. Key details of the successor scheme transition. The pilot ends in February 2026, with the new permanent programme beginning soon after. Funding, a significant allocation in Budget 2026 supports this, building on the €1.5 million for culture. The goal, to make basic income for creatives a permanent fixture, reducing precarity in the sector. The impact. Evidence from the pilot shows improvements in mental health, sectoral retention and creative development. Before the successor scheme, the pilot duration was from 2022 to 2025 and it was extended to February 2026. The participants, 2,000 artists, received €325 weekly. Taxation. The payments are taxable. Schedule D, USC and PRSI. What next? The government is taking learnings from the pilot to design the permanent programme. There's advocacy to expand the scheme and address issues like disability support, as concerns remain about potential cuts or gaps, despite the commitment to permanence. In essence, Ireland is moving from a groundbreaking temporary support system for artists to a permanent national cultural investment, signalling a long-term belief in the value of creative work. The national minimum wage. As of January the 1st, 2026, the national minimum wage increases to €14.15 per hour for workers aged 20 and over, following Budget 2026 announcements, with tiered rates for younger workers. This is an increase of 65 cents from the previous rate and applies across Ireland, and it affects employers. And employers will have to review payment systems for compliance. The key dates: effective from January the 1st, 2026, aged 20 and over, €14.15 per hour. That's the 100% rate. Aged 19, €12.74 per hour, that's the 90% rate, and age 18, €11.32 per hour, that's the 80% rate, and under 18, the €9.91 per hour, that's the 70% rate. Why it matters. Budget 2026. Announcements in October 2025. This change is part of the government's plan to adjust wages based on recommendations from the Low Pay Commission. Employer action. Businesses must update their payroll to ensure all employees receive at least these new minimum rates to avoid compliance issues. Universal Social Charge, or USC for short. The ceiling of the 2% rate of Universal Social Charge, USC, is being increased by €1,318 from €27,382 to €28,700. This will ensure that a full-time worker on the minimum wage who benefits from the increase in the hourly minimum wage rate from $13.50 to $14.15 will remain outside of the highest rates of Universal Social Charge. The USC concession for medical card holders is being extended for a further 2 years to December 2027. Reduced rates of USC apply to individuals who have a full medical card and whose income is €60,000 or less per annum. The reduced rates of USC are 0.5% on the first €12,012 and 2% on the balance. The 2% rate band limit for USC will increase to €28,700 from €27,382 from the 1st of January 2026, means that the increase in the national minimum wage of 65 cents per hour from the 1st of January will not bring full-time workers into the higher 3% rate band. Tax bans and tax credits. The value of tax bans and most core tax credits, as we can see here on these tables, remains unchanged from 2025. Flat rate expenses tax credits. Every PAYE worker that is entitled to the flat rate expense tax credit must reapply to have it added to the tax credits for 2026 or claim it back on their income tax return. PRSI rate increases. The average PAYE worker will be paying €350 more in PRSI in 2028 compared to 2023. Employers will also be paying €350 more to the Exchequer for each of these employees in employers' PRSI. That is a total increase to the Exchequer of €700 for every PAYE worker. Ministers agreed to PRSI changes which began with two 0.1% increases, the first in October 2024 and then again in 2025. PRSI will jump by a further 0.15% in 2026 and 2027, followed by a 0.2% increase in 2028. While none of these increases individually may impact greatly on take-home pay, PAYE workers over the course of 5 years, they will have a significant effect given that auto-enrolment coming down the tracks for many PAYE workers and their employers on the 1st of January 2026. Which brings us on to auto-enrolment and my future fund retirement savings schemes and the tax treatment of pensions. The Finance Bill of 2026 will provide for additional amendments to the tax treatments for the auto-enrolment retirement savings scheme. These amendments will address the tax treatment of auto-enrolment retirement saving on the death of a participant. Further amendments will also be required to exempt auto-enrolment provider schemes from investment undertaking tax and to provide an exemption from USC for employer contributions to auto-enrolment. We have other reels done on auto-enrolment to assist both employers and employees with the process. Ask in the comments on our Facebook page or on our group Payroll Matters in Ireland if you cannot locate them. Changes to tax agents' authorisations. In Ireland, a major change effective from January the 1st, 2026 is that the Revenue Commissioners will only pay tax refunds directly into the taxpayer's own bank account. Revenue is withdrawing the A2 process. Tax agents or rebate companies will no longer be able to receive their refunds on a client's behalf and deduct their fees from it, known as the A2 process. The key details of the change: refunds go directly to you. All income tax and universal social charge USC overpayments will be refunded to the bank account details saved in your My Account record with Revenue. If no bank account details are on file, a cheque will be issued instead. Agents now must charge fees separately. Tax agents can still manage your tax affairs and file your returns, but they will have to collect their fees from you directly, typically via an invoice, card payment or direct debit. Safety and transparency. This change is intended to reduce risks to taxpayers, prevent unauthorised bank detail changes, and increase the transparency of the fees being charged by agents. What you should do now. To ensure you receive any future tax refunds without delay, you should take the following steps. Check your bank details on Revenue. Log into your My Account on the Revenue website and ensure that your current bank account details are correct and registered in your name. Do the same exercise on the 1st of January 2026 to ensure that your current bank account details are still correct and registered in your name. Review existing agents. If you previously authorised an agent to receive refunds for you, the bank account details on your record will be removed by Revenue by the end of December 2025. You should review or remove any old agent authorisations that are no longer needed. Understand agent fees. If you continue to use a tax agent, ensure you understand their new fee collection process and read the terms and conditions before agreeing to their service. This change primarily affects the method of payment, not your ability to use a tax agent for assistance. Please note that Boyle Payroll Project Management are tax agents, and we never altered a client's bank account for the purpose of deducting our fees from any refunds due to PAYE taxpayers. We have always charged a fee directly to the PAYE worker by way of an invoice and will continue to do so. Use the contact form on our bppm.ie website for more details. Please also note that Boyle Payroll Project Management were instrumental on having this change implemented by Revenue, and to that end we appeared on the Joe Duffy Show in discussing issues PAYE taxpayers were having with tax agents deducting funds from PAYE taxpayers' refunds. And as a result of the Joe Duffy Show, this issue was brought up in the Dáil, and hence the subsequent amendments to the legislation were made. This table shows a summary of the budget changes affecting paying taxes in 2026. Can I ask those of you that have not already done so to hit the like, follow or subscribe button depending on what platform you are watching this video guide on, as we have many more helpful pay, income tax and other work related guides and videos to bring you. For more, check out our website www.bppm, follow this page or join our Facebook group Payroll Matters in Ireland. It costs you nothing to like, follow or subscribe, but could help you save hundreds or even thousands of euro into your hand on pay and tax. Go on, hit that like, follow or subscribe button. Go on. See you next time, and thank you for watching.